Hello and welcome. In this video, we will learn a few rules that we need to follow while trading. Okay? In the beginning of this video series, I had explained you the concept of pending orders, right? Price comes down, some orders get executed, price moves up, it comes down once again, some more orders get executed, price moves up, comes down, all the orders get executed, the price moves up, and now when it comes down, it breaks and goes down. This is what happens, correct? Now, what I am trying to say in this video is we will be taking entry in a trade here and here, and that's all. When the price comes down first time, we will be getting a setup, correct? A drop base rally setup in this case. And once again, when the price comes down, we will take an entry here, hoping that the price will go up. And once again, if the price comes down here, if we take a trade, it will be a risky trade because we do not know how many pending orders are there. We do not know whether this zone will hold. We do not know whether this will be a demand zone. So, the entry if we take here will be a risky one. So, the price comes down once, it moves up, we take an entry here, and when it comes back to the same level, if you want to be safe, you have to ignore it. If you want to take the risk, you can take an entry here, but if it comes once again, we will neglect the trade or we do not enter it. No matter what happens, the price may go up if there are pending orders here. If there are not, the price will come down, but we are not worried about it. Okay? Now, let me take a scenario. We have this, correct? We have a swing here with two leg outs. We have a drop candle, base rally candle. We have one leg out here. So what do? We wait for one more candle and we wait for one more candle, and we want this candle to break the previous swing, correct? And when that happens, we will mark this as a demand zone. Now if the price comes back to this level, we will take an entry here, hoping that the price will go up. How many times did the price come to this level? 2 times. This was the first time and this is the second time. So now if we take an entry, the chances of the price moving in our direction is more. Alright. Now if the price comes back once again here to this level, we will not be taking an entry here because we do not know how many pending orders are there. We do not know whether this will act as a demand zone anymore. Okay. Now, here you have to notice that this did not break this level. Let us completely ignore this setup for now. Okay. And take this setup now. We have more than 2 leg outs here. Okay. The price moved up, it came down. So this was the swing. So we have 2 leg outs here. And then we have 2 leg outs here also. Drop, base, rally. Correct? But this rally did not break the previous swing, which is this. So this is not a good demand zone, and so we do not take an entry. Now let us proceed to next case. We have a setup here. We know what to do. We wait for few candles to break this level. If it breaks, we mark the zone and wait for the price to come back to this level. If it comes, we take an entry and let us say the price moves up. Now if you see, we have drop, base, rally, and here we have three legouts, and here the price has broken this swing. Now this is not our swing, this has been broken by this. This is our swing and this has been broken by this. And now if the price comes back to this level, which level? This level, this zone. If the price comes back to this level, once again, we will take an entry because this is a fresh demand zone. See this demand zone, the price came once and the price came twice. Now the price broke the previous swing and it moved up higher. Now we have one more demand zone being created here. So if the price comes back to this level once again, we will take an entry. Alright? Yes. Now let me proceed further. Let us say the price goes up and it comes down. We have a setup here. What is the setup? A rally base drop setup. The drop candles have broken the previous swing, and so we can consider this as a supply zone. If the price comes back to this level, we will take an entry hoping that the price will go down, and let us say it goes down. Now how many times did the price come to this level? One time and two times, correct? But now we have one more setup here, rally base drop, and this drop has broken the previous swing, and now we have one more zone here, supply zone. If the price comes back to this level, we will take an entry here, okay, hoping that the price will go down. Now to this supply level, how many times did the price come? 1 and 2. Okay. Now this here has this here is one more setup. We have rally base drop, and this drop has broken the previous swing, and so we have one more zone here, and if the price comes back to this level, we will take an entry hoping that the price comes down. Is it clear? So this is how we trade in the market. Okay. Next, let us say that price is coming down from this level. Okay. It reverses, and let us say that it comes to this level, and here it forms a setup and comes down. What setup? A rally base drop setup. And since it broke the previous swing, we will mark the level here. This is our supply zone. Okay. If the price comes back to this level once again, we will take an entry. We will take an entry here hoping that the price will go down. And that is what happens. And here we have one more setup, a rally base drop setup, and this price breaks the previous swing. So we will mark our supply zone here once again, and if the price comes back to this level, we will take an entry hoping that the price will come down. Let us say that it comes down and we have a rally base drop setup here, and so we will mark this as our new supply zone. If the price comes back to this level, we will take our entry here hoping that the price will go down. Once again it has come down, it has broken the previous swing, and so we will mark our supply zone here. And now let us say that the price came only till here and then it came down. So here is our level. Here is our level, new level. And if ever the price comes back to this level, we will take an entry in short direction. And if it moves once again above this level, from here to here, we will be buying, meaning we will look for a long entry. We will not sell between this level and this level. When the price moves above this level and reaches this level, we will take short entry. We will take short entry. Okay? Once again, I am going to repeat it. So the price has come down here and it has moved only till here. So this here is our fresh level. If the price comes down and comes back to this level once again, we will take a short entry, and if it moves back above this level, we will go for our long entry till this level, and when it reaches here, we will sell whatever we had bought here and enter a new trade for selling here. Okay, the reason is this level is untested, meaning see this level, this supply zone, how many times did the price come to this supply zone? One time, two times. How many times the price came to this level? One time, two times. How many times did the price come to this level? One time, two times. How many times did the price come to this level? Only one time. Correct? So we have some pending orders here. So when the price comes back to this level, we will take a short entry. Alright? Now, if the price moves above this level, then there is nothing to stop the movement from here to here. This is our initial supply zone, right? So from here to here, there is nothing to stop the price. So if it moves up above this level, then we can expect the price to go up till this level. Alright? Now, this is only the theory. When you look at a chart, it will not be as easy as this. It will take a lot of practice before you become good at it. Okay? Alright. So I am in my Zerodha dashboard and I have opened the chart of Tata Power, and this is a day chart. Okay? Before I explain you the concept, I want to tell you that round numbers and a zone near round numbers act as supply or demand zones. Okay? Now what is a round number? This varies from stock to stock. 0, 25, 50, 75, 100, 125, 150, 175, 200, 225, 250, 275, 300, 325, 350, 375, 400 and so on. All these are round numbers. A zone near the round numbers act as supply or demand zones. Okay? This is because big players generally keep their limit orders at round numbers. And I told you that it will not be an exact price but a zone near it. For example, let us assume that I had bought 100 shares of Tata Power at 370 rupees. Now what will I do? I will keep a sell order at 400 rupees. 370 is where I bought it. I will keep a sell order at 400 rupees. I will not keep it at 420 or 380. I have bought it assuming that the price will go up. And for me, if it comes to 400, it is a good profit and I will sell it. Correct? One more example. If you want 6 rupees or 7 rupees, you ask 10 rupees with your parents, correct? Let us say that you want 7 rupees for something. But what do? Do you ask exact 7 rupees? No. You ask 10 rupees. If you want 40 rupees, then you ask 50 rupees with your parents or friends, correct? So we go for round numbers. That is a psychological number. So here the round numbers act as support or resistances or supply or demand zones. Now, when I say 400, it is not the exact same level. 400 plus 5 minus 5, and that zone acts as supply or demand zone, meaning from 395 to 405, that 10 rupees acts as a zone. I had told you that big players keep limit orders in a zone and not at a single point, correct? So that zone near the round number, acts as either support or resistance or supply or demand zone. Alright, now let me go back and let me delete this. Alright, and let me start from here. Yeah, let me start from here. You can see that the price has come down from here or started coming down from here. Now whatever I have explained is theory. In reality, when you look at a chart, you will not find the exact same setups. Now whatever I am saying you may not make sense now, but once you start looking at charts and try to look for the patterns that I have explained, it will start making sense, and only by practice you will be able to initiate a trade. Okay, so you can see that the price has started coming down from this level, correct? So let me mark a line here, and you can see that the price is 394.71, or let me move it to 395 itself. Okay, 395, as I told you, is in the zone of round number. 300 is a round number, and I told you that there will be 10 rupees range around the round number, and that acts as supply or demand zone. Now this 10 rupees is only for this, and this is just my guess. It may not be 10 rupees also. And when the stock price is high, for example 8,000 rupees or 6,000 rupees, then the zone value will also change. For example, if you see this stock escorts, its price is 3,816 rupees. Current market price is this. Okay, its next round number is 4,000 rupees, and maybe 3,900 to 4,100 is its zone, which is 200 rupees. Okay, so as the stock price increases, the zone value or the zone also increases. Alright, it is not universally 10. Now price started coming down from here, and it came till here, it moved down, and here we have a setup. Okay, here we have a setup. How is this a setup? Now price came up, we have two leggings and price reversed, and we have two legouts, and the legouts broke the previous swing, which is this, which did not happen here also. We had legouts, but it did not break previous swing. We had legout, but it did not break previous swing. But here it broke previous swing, and so we can mark this as a supply zone. Okay, supply zone, this one. All right. Now the price has come one time here. The price has come one time here, meaning if it comes one more time here, we will take a trade, and that's all. All right. Let us proceed further and see what has happened. All right. Okay. So we have one more zone here, and we can say this as a zone. We can say this as a zone because this here broke the previous swing. This here broke the previous swing. So we can consider this as one more zone. Now, when the price comes back to this level, we will take a trade. So let us see what has happened. Okay, so the price has made a swing here, it has come here, and it has made a swing here, and it has broken the previous swing here, so it has come down. So we can mark this also as a supply zone. Okay, meaning if the price comes back to this level once, we can trade it. And it has come here, it has moved above by a small amount. But if we had taken a trade here, it would have it would have been a success. But now, if we see this level, price has come to this level once before, correct? You can see it has come back to it has come to this level once, meaning some pending or some orders were executed here, some orders were executed here also. This is a big opening and closing or a big rally candle. Do not worry about these kind of candles. But price has come down, price has come once here, twice here, thrice here, meaning we would not be taking this trade. Okay, no matter what happens, we really do not know how many pending orders are here. Pending orders may be there, may not be there, we do not know. So we will not be entering this trade. Okay, of course the trade has been good, but we would not be entering this. But once this level breaks and the price moves above this level, then the next stop is here, because from here to here there is no zone, or there is nothing to stop. Of course there is one here, but that is a minor stop. So we can see that the price has moved till here. Now we can take a trade here, because the price has come once here, and twice, correct? Twice here. So one time, two time, and if we enter here, this would be our last trade, meaning this would be a risky trade. We are assuming that when the price came here and here, all the pending orders were executed. We do not know whether pending orders are here or not. So if we enter this trade, it would be a risky one, but it had worked out in our favor. Okay. Next time the price comes here, we would not be entering, because we are almost sure that all the orders are executed and there are no pending orders here. So now it has gone up till here. Okay. So this is how we analyze the trade. And as I said, it is easy for me to show a chart and explain you things here, because all these are after the market. I am taking the data that is available right now and I am showing you and explaining things. But when you look at live chart, when you enter into live trade, everything will be different, and everything comes with practice. So I do not want you to fear. I just want you to practice and then enter a trade. All right.